Good morning, everybody. Mike Vacchi, Princetontrader.com, here for ntmarkets.com with your Thursday morning pre-market webcast. Okay, 10 handle move lower in the overnight. We're trading 1672. It brings two key levels to the forefront this morning. You've got the 1670 level, which has been very important all the way through. It provided support on the 25th and 26th of July that allowed the 35 handle move up to 1705. So question number one is, does 70 hold? That is a worst case scenario for the bears, because if 70 holds, then you've really got an established floor on this market that is stretched out not only over today, but really you could argue since back in the middle of July. And that would be, along with the punch of the second deviation band, would allow for a snapback. And it would be a pretty significant snapback. It would pretty much clear the way absolutely up to the middle band, and potentially, if momentum got going, up to the upper band. That, to me, though, is the least likely scenario. The most likely scenario is that we push below 70 and get into this third standard deviation band. But like I was telling my members yesterday on our subscriber webinar, and like I was mentioning last night in the evening recap, there is so much tension built up in this market. The bands are so tight that if we do break lower here and start to get into that third standard deviation band, I would expect it to run at least 2 to 3 sessions. And the mistake that you don't want to make is the mistake that people are making right now as I tape this, as we touch this band. They make the rote response of saying you fade a move to the Bollinger Bands, and they're already short. They're short 74, and they're already down 2. And if this volatility expands lower, they're going to be down a lot more before it comes back. The example I showed last night on the evening recap was when we broke out of this very tight volatility squeeze. We touched the band here, then we ran another 24 handles up before we reversed. So don't just Pavlov's dog the lower 2 standard deviation Bollinger Band, because you have got to see the big picture, the amount of compression here, and the kind of force, even though it's August, that can come when that volatility expands and those Bollinger Bands begin to blow out. Okay, so 70 is key, the 67 level is key, and underneath the 60 level is key. If the bears drop the ball yet again, like they pretty much always do, then your critical area is the middle band, 1689. Close above the middle band today at 1689 would be a huge reversal. That's 17 handles from here. What I would be interested to see is if the bulls were able to close above yesterday's 1681 low. Okay, the bears are in the best opportunity they've been in a long time to push this market lower. Let's see what they do with it today. So everybody have a fantastic day. Mike Vacchi, Princetontrader.com. Check out the website. There's a link attached to this video. For the first time in 6 months, I am doing a webinar. This coming Wednesday, August the 21st. Going to be talking about volatility levels, pivots, and talking about where the market has been, and more importantly, where it's headed into the fall. So I hope you can join me. We generally get pretty good feedback, and we're going to start doing these a little more frequently, but the first one in 6 months is coming up on Wednesday. Everybody have a fantastic day. Trade them well.